Should we buy or sell the Clean Energy ETF? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So Clean Energy is under the energy overall category. We do see that global clean energy is up 26% from the low, but we are minus 16% away from the 52-week highs. Here is the weekly data points, big picture chart, and we do see that this ETF has been through a lot. Huge rallies, devastating sell-offs, long-term consolidations, the gamut. If we zoom in a bit here, then we do see that there's a very interesting event at the moment. It is easiest to actually see here with the daily data points, and that is this red 200-day moving average. So if we zoom back here, so here it is very important as resistance, then it became support here. Here we just bounce a bit from it, then we just implode. I think you can see it yourself, though I can of course draw it in to just make it a bit more vivid. Surgical resistance, when it became support, we go up big. And if we... So let's get to our present time frame. Okay, so here, let me draw it in. Now, the problem with that moving average is that it's recently been very strong resistance. It's been a very good place for the bears to put on positions. And we are currently testing that moving average right here and now. So the basic primary assumption is that this is a resistance level. Given that it's been a resistance level for such a long time, going all the way a year back, I would give this one to the bears. They simply just have a moving average that's been valuable. If we do look at some of the other indicators here, so let's look a bit at the RSI and the crew. In terms of the RSI, we are not in any kind of key level. It's not like a level to become bullish or really that bearish either. In terms of the PPO, you could argue that the distance between price and the 20-week moving average, it is close to the level that marked this high back here. When we go to the daily data points, accumulation distribution is very bullish, so we do definitively have an inflow of money. Daily RSI, it is a bit in danger territory. We see that during this rally back here, we did go up significantly higher, but we are very close to RSI levels that marked highs here and here. And also in terms of the distance from the 50-day moving average here in green, it is at the level that marked this high. So there are some danger signs. So I think that the key thing here is 200 DMA resistance. That's the main event now. So in terms of the technicals here, it is of course possible for us to have a breakout. A breakout would be bullish. Given, however, that the 200 daily moving average has been resistance for over a year and we have spent most of the time below it, I must basically just give this one to the bears, given the current context. But obviously, if we were to be able to get above it, that would be bullish. Next, let's go to the seasonality. When we look at the seasonality here to the right, we do see that over the last 5, 7, and 10 years, the coming seasonality is pretty darn good actually here. So let's actually look a bit further back. It is very good here, peaking towards late June. So that's interesting. Looking here to the left, We do see that over the last 5 years, April is a very strong month. May is the weakest, however. The last 10 years, like that. Then we do see that April is decent, but May is weak. Then June, July, August are strong. Big picture, last 15 years. So April is 50-50, but we do tend to see a gain here for the bulls. May is the weakest month. So looking a bit, longer term, the seasonality is very good. The only caveat here with the seasonality is that, well, it's good seasonality and that's extremely good, but the caveat nonetheless is that May is weak. So that is just something to be aware of, that May can be a time where there's a pullback at least. But I do think I will give the bulls, 4 here for seasonality. It's pretty good. Next, we will look at the fundamentals. So I am now comparing the global clean energy to the global energy ETF. When we look here at performance, year to date, the global energy ETF has massively outperformed clean energy. You could, take that as contrarian bullish for the ICLN. Maybe there's more value. We certainly see here that the price earnings is much higher here for global energy. There are, of course, reasons why it is that high, but those are reasons that could be more temporary than people think. You do see here that there's a 27% difference here in price earnings. In terms of dividend, it's much bigger for the global energy ETF. Looking here at the holdings, you have a bunch of classic energy companies here to the right, and clean air to the left. Here you can see the sector breakdown, market cap as well. So you do have more mix here in the clean energy space. Here you can see the country distribution. And America is the biggest, well, the country represented the most here in the clean energy and also in the broad and the energy ETF. Another thing that is very relevant in terms of the fundamentals is that due to the conflict in Ukraine, there's a lot of talk about the need for energy independence. The nice thing about clean energies, like nuclear, solar, is that they can be very local. So you don't need to have like a massive, supply in terms of natural resources, which of course is very unevenly distributed across the planet. So there are a lot of incentives for there to be more investment in clean energy. The challenge, of course, is that we are way more dependent on the other types of energy. So I think I will give this one here to the bulls. But I think that the most fair number would be a 2. Here is the correlation between global clean energy and the S&P 500, and it's at 79%. We have minus 16% with the global energy ETF, IXC, 54% with the carbon emissions futures, and then minus 82% here with the dollar index. Daily data points, 38 with S&P 500, minus 54% with energy, global energy, then minus 77% here with carbon emissions futures, and then we have minus 45% here with the dollar index. Looking long and short term, the strongest correlation we do get here is actually with the dollar index. So there's a negative relationship, which means that when the dollar index goes up, it usually is bad for clean energy and vice versa. So let's look a bit here at the dollar index. So looking here at the weekly data points, we have seen a lot of a big move here for the dollar. If we look here at the MACD, longer term, we are at a very high end. There have been some super moves before that were bigger, but we are at a level that has a tendency to create pullbacks. In terms of the RSI, we have a bit of a similar message, and also the PPOs, which means that there is an elevated probability that we will see a cool down in the dollar index, unless the current move is similar to some of the super moves we have seen before. One of the very interesting things in terms of the dollar here is that the ruble. So here as an example, we see the US dollar against the ruble. So initially we saw like a huge spike here for the US dollar, but it has significantly deteriorated against the Russian ruble as of late. So that's very interesting. There's been a lot of talk about the fall of the dollar, and that that could be like the super genius master plan behind the conflict in Ukraine. Of course, there's been a lot of prophecies about the fall of the dollar, so that's a very old topic in the financial markets. The fact is, though, if you look at history very long term, monetary history, reserve currencies have risen and fallen. So all of human history tells us that yes, we will definitively see the end of the US dollar and definitively see something new to replace it. Timing the rise and falls of reserve currencies, or basically the primary modes of monetary transactions, that's very difficult. Those are very slow-moving developments. But yeah, if there was some kind of situation that could lead to it, certainly now is a very interesting setup in terms of there being a lot of movements now in monetary transactions that we haven't seen in since the rise of the dollar, basically. Okay, so anyway, here is the relationship between the Clean Energy ETF and the US dollar index. So we do see that there was this primary downtrend. Now we have seen a big rise, but if we draw in the current level, we do see that we have risen to levels that potentially could be a resistance. So there is the possibility here of horizontal resistance. That's interesting. Let's see if we get some additional data here from the Seasonality tool. So the Seasonality tool strongly suggests here that over the last 5, 7, and 10 years, the Clean Energy ETF tends to outperform the dollar index, heading here towards the 28th of June. The seasonality data we got here in terms of this relative performance, it does push me a bit here in the direction of a bit bullish. So I do think I will give the bulls here a 2. We could, of course, also look at the relationship between the dollar index and the S&P 500. But given the correlations that we have here, it's I think it's best to do it this way. So we do have a score here of 1.3. So the data we have looked at, it is more favorable to bullish positions than bearish, which means that even though we do have 200 daily moving average resistance, which definitively will be used by the bears to short this ETF, the seasonality data, fundamentals, and changes here in relative performance, it increases the odds that we will break through that resistance level. So this is a definitively very interesting setup for sure. But I do think that the 200 daily moving average, it is a very key line in the sand. So in order to turn actually bullish, I would want to see it actually. The bulls should be able to break out above it. It's so close anyway. So yeah. But definitively very interesting times ahead, especially in terms of energy politics. I do think that especially the coming autumn and winter will be extremely interesting in terms of politics, because I do think that Putin is playing a longer term game here. So I think that the energy crisis in Europe especially will be very dire come autumn winter, and that is when you could see a situation where Putin basically says that unless sanctions are lifted, there will basically be a major energy and also food crisis worldwide. In order to get full access here to the educational material, you just go here to DiamondArm.com. That is where I can get into how to manage positions, how to find interesting opportunities, what to do if things change, so on and so forth. A key part of the method that I use to find opportunities is that I have these trigger events, these lines in the sand. So the great thing about these very tense levels is that you can benefit in both directions. So if as an example, you have the 200 daily moving average resistance, if we do get a clear rejection, that's a good short opportunity. But there are some very shrewd ways to benefit very quickly, if we do get a breakout.